Hello everyone. You are joining with another podcast at Advocata's Studio. There's a big conversation about digitizing all payments and moving towards a cashless society. And there's one pioneer organization who works on it, and that's pretty much one of their main mandates. That's none other than LankaPay. And we are honored to have the CEO of LankaPay, Mr. Channa De Silva. Mr. De Silva, thank you very much for joining Advocata Studio.
Thank you for having me.
I think first let's understand, while I'm sure most of us go to the ATM and withdraw money and we deposit checks, and business community, they ask transfers money from this bank to the other bank. People do online payments, but I'm sure not many people aware of the role of LankaPay that is in this entire system. Would you first brief our audience, what is LankaPay and what's the structure and what is your role on day-to-day lot of transactions?
Yeah, I think good question. So LankaPay is actually, if you look at a facilitator, it's actually a primary role is a back-end role where we interconnect all the banks.
Right.
So I mean, if you will, LankaPay was started as LankaClear in 2002 to address a problem, which was interbank check clearing, which took about 6 to 8 days to clear. And the requirement was somebody had to wait for that much for the funds to realize if it's an interbank check.
Right.
So for that, actually, a system was required to reduce that time frame. And since central bank is the regulator, they couldn't implement a solution. So they needed a different entity to carry out that execution and transaction. So that's where they set up at that time, LankaClear as a public-private partnership, which 47% shares owned by the government and 53% by the banks, and to function as a private company because they wanted somebody to be agile and to deliver results in a very short time. So that's where LankaClear was set up to initially do the interbank check clearing, which system was implemented in 2006, where the interbank check clearing time was reduced to 1 business day using a system.
Right.
So that was the initial. Then what central bank and the other financial sector realized was there's more to the payments than checks. And another problem that they realized was we are talking about a less cash or a cashless economy, but there's no country without cash. So there is a requirement for cash in Sri Lanka. But there is an inconvenience factor where even though the banks have introduced ATMs, you had to go to your own bank's ATM to withdraw cash. Whereas especially if you take rural areas, you don't get many ATMs, and the ATMs that are available are from a different bank. So people had no choice but to travel 5 to 10 kilometers looking for your own bank's ATM. So as a result of that, central bank wanted LankaClear at that time to establish a network where it connects all the ATMs of banks and facilitate an interbank ATM transaction where a customer could go to
any ATM
and withdraw cash and check their balances. I mean, basic services, not all the services, but those are the most commonly used services. So that was established in 2013. And the next step was basically to set up real-time fund transfers, because that's actually previously, I mean, there were other mechanisms. You had to go to a post office to send money to somebody and things like that. Why can't you use your bank's internet banking or mobile banking and just send money to somebody from home or wherever? So that's where LankaPay established the real-time fund transfer mechanism in 2014, where it connected all the banks where you can send funds immediately in real-time basis, where the beneficiary gets credited immediately the fund transfer. So in that sense, the entire rail of digital payments is actually running on real-time payments now. Later on, we extended that into mobiles and other areas. The role of LankaPay is basically facilitating these interbank transactions, whether it's check clearing, ATM, or real-time transfers, and the entire rail of digital payments across banks. We actually later on extended it to non-banking financial institutions as well as fintechs as well. So now the entire ecosystem is connected in a single network where you can send and receive money from any bank to any bank, or anybody to anybody.
Yeah, so just basically when you go log into your whatever that your bank's online system, let's say Sampath Bank, you go to their online system and you click, and then the money transfers. That happens like real time when you click this button to transfer or proceed or whatever, and then like in few seconds time the money is transferred to whoever the other person's side, and that happens through the LankaClear platform. Yes. And that's how this game works.
Yes. So there is a slight listing which may be of interest to. So the customer gets the money in real time, but the bank to bank, there are two exchanges between the banks. That happens subsequently. That is through a system called RTGS. That's done by central. That's the settlement part, but which the customer doesn't need to be aware. But the customer gets the funds instantaneously. So the system works, and the customer gets the funds immediately.
Excellent. Just wanted to go back on one point that you mentioned, that in terms of the structure of LankaPay, you said overall it's about 47% to the government. So the composition is, I think from what I read, about 19% to 20% is by the central bank, and you have the other bank. So what you probably meant was also the combination of the People's Bank and the BOC together.
Yes. So I think, if you look at LankaPay, it's a public-private partnership where a shareholding. So it's set up as a private company, and for the purpose of to be agile and invest ahead of the curve in technology. Otherwise, if you are a government entity, if you go through the process, it takes a long time to implement something. So I think it's the purpose-driven. It actually set up in a way that the shareholding for government is kept below 48%, so that the company actually can function fully as a private entity and deliver. However, the government agenda is driven through central bank, fully regulated by central bank. All our systems are approved by central bank. Whoever who connects to our network must get central bank approval. So in that sense, the complete regulation is ensured. And also from a security and other perspective, we have to follow through international standards like the PCI DSS, so that our data is secure and hopefully tamper-proof. I would say hopefully, because no system is 100% tamper-proof. But we go through the international standards to make sure that our systems have the highest security standards. So in that sense, rest of the actually 47% is currently owned by the government and 53% by rest of the commercial banks. So, however, we are also connecting other NBFI finance companies and fintechs. They are coming as secondary members. They are not shareholders, but they are in our system. And we connect the entire ecosystem together. So in that sense, we can facilitate any type of payment across from one entity to the other. And immaterial of the location, wherever, and immaterial of the device, immaterial of the mode.
Got it. Now, just to understand, just quick question. Now, what if the shareholding, now you said about 48% to the government, that's including the People's Bank and the Bank of Ceylon. What if it's above 48% or if it exceeds 50%? Because already it seems a majority is owned by the private sector. You mentioned if it's above, then you cannot run as like a private company. Like, what are the implications?
It cannot go because article specifies that government shareholding cannot go above 48%.
And if it goes, even if you change the articles of association, if you change it, then are you coming under COPE or like what are the other implications?
Yeah. So the whole idea, the way it was structured as a private company, was to create agility, because in technology it's changing so fast. You can't wait for 6 months to implement. So it's kept in such a way that it's fully regulated. However, can function as a private company, so that we can respond to market requirements immediately. So I think it's best it kept that way. Otherwise, we will not be able to implement the technology at the pace it requires.
Now, just to understand the back end a bit, so what do you actually provide? Like, is it like a technological product? I'm just for common man's understanding, because I only know like I transfer from my system, but I wasn't aware like I wasn't in the sense that our audience or someone may not be aware how this actually banks, because when I transfer money from my bank, how does it really go to someone else's bank? So whether it's like a network platform or how does it work? Also for check clearances. And I would also like to ask about the ATMs. People may think like, I go to my bank's ATM. So is it owned by LankaPay, or is it like that bank, or how does it really work? Could you kindly explain these two to our audience?
Yeah, so what we have established is connectivity through the telco network,
right,
among all the banks so everybody is connected to our backend.
Right.
Technologically connected through lease lines.
Any bank is technologically connected to LankaPay's backend.
Through VPN, through secure channels. So once that is connected, so what we actually, our systems, what it does is actually it's exchanging messages.
Mm-hmm.
Right. So, for example, technically what happens is if I want to send 1,000 rupees to somebody in another bank, the message has to go saying the money needs to get transferred from this bank account to this bank account, the amount.
Right.
Right. And what we actually do is when the bank initiates, it connects to us and which knows where that other bank is. So we are basically doing routing function, message formatting and function so that both sides understand. So it's actually a technological messaging platform, which is established where the messaging goes saying, hey, credit this amount to this account. And it's a rule-based system. Right. So there are a certain set of rules that we have defined so that both sides have to adhere to and agree to. Otherwise, this cannot work as a common network. Right. And then, as I said, so the instruction will go from one bank to the other. Hey, please credit this amount against this bank account so that the other bank honors. And a response comes to the sending bank saying, hey, this account is credited. You can confirm to the customer that the money has been transferred. So that's the basic platform for all the kind of services that we provide. We basically send that message, communication, and send the confirmation back. From a customer perspective, then the transaction is done. Right. So moving back to ATMs. So basically what happens is previously you had to go to your own bank's ATM to withdraw. So if you go to an ATM, you would see the LankaPay sticker.
Right.
So what it means is actually it's connected to what we call our common ATM switch. Right. So all the bank's ATM switches are connected to our switch.
Right.
So what happens is if I go to another bank's ATM and put my debit card or ATM card, it basically connects to our system and authenticates because you type the PIN.
Yeah.
It actually through our system authenticates from your own bank.
Right.
Because you have to validate whether this is the right customer and the PIN is correct. So once that is done, a message is sent, authenticated, and the customer's account gets debited in real time at the customer's bank, and the message is sent. You can disperse the cash. So and then the bank that owns the ATM instructs the ATM to release the funds, so the customer gets cash instantaneously. However, actually the cash in that sense belongs to the bank that owns the ATM. So subsequently, a financial transaction happens between the two banks for the settlement between the two banks, but the customer can withdraw cash instantaneously. Same way, customer can also check his balances through the same system, through authentication, check the bank, customer's bank, and sends the balance. This is the balance in your account. So those are basic services that we provide through the common ATM network.
And also from the little that I read, like you run like multiple systems for check clearance. I think there's something called, not the check clearance, like I think there's SEFs and slips and different systems.
Yes.
Could you elaborate a bit more? Is it like, as you said, like from one person transferring to another, there's one system, and if it's one person transferring to a foreign account, if it's another system, or whether one person clearing a check, is it another system, or whether it's an international bank, is it another system? Could you elaborate a little bit on those, like, those abbreviations? What does it really mean and how does it work?
So those are different systems, right? So for example, check clearing, it's actually based on imaging. So what actually happens is, previously what happened was the physical check, once you hand over to a bank, they used to send the physical check to the other side to validate the signature and all that, right? So that was the physical, that's why it took 7-8 days for a check to clear earlier, right? So what we did was, when you actually hand over the check to the bank scans it immediately,
right?
And it creates that image. And that image is the one that gets transferred through technology.
Right.
Image plus the text on that, there's a barcode that has the information of customer, account number, and all those things. So that information gets transferred to us. Then our system sorts, when a check comes, our system sorts and determines, okay, this check needs to get directed to a particular bank. Where the check has been issued, right? And then they confirm that the funds are available, and the confirmation goes back to that bank to release the funds, right? So it's basically a technological system,
and this all happens automatically. Not that one person is at the back end and checks nothing like that. It all happens.
All happens automatically, right? So that's the check clearing. So in terms of CEFS, which is the real-time system, it's one-to-one. So I send money to somebody instantaneously from one bank account to another bank account. Then we also have a system which is called SLIPS, which is bulk payments. Now, for example...
what do you mean by bulk payment?
For example, salary payments. If you take an organization maintains the account in one bank, but the employees have their accounts in different banks. So they need to send money. Previously, it was 2 checks, which took several days. Now what happens is, bank sends an instruction to their bank, saying, okay, transfer funds to these accounts of these banks. So that's an instruction through a file system, right? So it creates a secure file that's actually digitally signed and sent to bank, and then it submits to our bulk system, which sends the money to different bank accounts based on that instruction, right? So it's called one-to-many. Right. So one organization's bank sends instruction in a file, send money to this account, 100 or 200 or whatever. So that actually is not real time. So it's what we call same day. So if you instruct in the morning, it happens in the afternoon, right? So that's why you get instructions in the morning and you get your salary credited in the afternoon. So it's again fast payment system, but not real time. But it's primarily for bulk. So all the EPF and other beneficiary payments, even ASWASM, all these are actually, because this government sends to multiple beneficiaries, this is actually happening through this SLIP system. And we also have a couple of other areas, like we also established US dollar clearing, which was a problem previously because now for interbank, so we have traders. So they do interbank dollar transfers for settlements, right? For their goods and payments for that. And previously, every transaction had to go internationally through Nostro, which costs like, $20-25. But here we established a system, domestic transactions can happen within the day, same day or next day. So a dollar transaction can happen locally. And what actually happens is, only the bank-to-bank settlement day end, one transaction happens through Nostro. So the cost structure for doing a domestic interbank USD transaction, we have brought it down drastically by enabling domestic interbank USD clearing. So these are some of the systems that we established. So what we do is, we actually, now once we established the real-time payments, we saw a gap in the market. How do you do mobile payments? So we talked about internet banking and mobile banking, but there are so many fintech apps out there, right? So the problem we saw was, the fintech is not a regulated domain in Sri Lanka. Some other countries, fintechs are regulated by central bank. Here, fintechs are not regulated. So they were actually outside the banking system. So then we need to go and figure out a way, how do we get into the formal financial ecosystem and ensure payments for them? So what we did was, we implemented a system called Just Pay, which is basically a customer can attach his bank account to a fintech app and carry out transactions.
Right.
Because fintech is not a bank. They are a third-party entity. So there, what we did was, only requirement is fintech to partner with one bank or one member, regulated member who's connected to our system.
Right.
So once they are connected to one bank, they are connected to the entire ecosystem. So they can actually target entire banking population using this, and drive financial inclusivity, financial transactions, provide services, because now they are now in the formal financial ecosystem through this partnership. So we have established a platform where a customer can actually attach his bank account and make a payment using a fintech, and it's fully regulated. It's going through the regulated financial ecosystem.
So just to understand now, with GovPay coming in, I think there was a conversation like you can pay through also, I'll use the example like LankaPay. So basically you give your account details to LankaPay, and your account details is mainly one of the licensed commercial banks which has been authorized by the central bank.
Yes.
And basically when you give those account details to LankaPay, which connects to the entire ecosystem.
Yeah. So what actually happens is LankaPay, if you take this example, is connected to a licensed bank.
Right.
So what LankaPay does is, basically instruct their bank to carry out the transaction. LankaPay cannot directly carry out the transaction. It's their what we call acquiring bank,
right,
which actually does the financial transaction. So that is why it's within the regulated system.
Right.
So through the app, what it does is just sends a messaging saying, hey, this one wants to send money to this one. Or something like that.
Right.
So in that sense, the instruction is issued to the bank, and the bank actually uses the regular real-time rails to carry out the transaction. And so once the transaction is completed, the bank actually informs the app back saying, hey, the transaction is completed and it's successful. So in that sense, the data actually, the data exchange is within the regulated banking system. What actually the fintech apps are doing is basically creating an interface, convenience platform for customers to enjoy these services, maybe more convenient than some of the other banking apps which are there, to provide a better service, better user experience. Right, so that's why the adoption on fintech apps may be more, because they may be more user friendly. They may be having more services available than others. So what we have really done is we have democratized the whole ecosystem, where a customer doesn't necessarily need to go to his own internet banking or mobile banking, where they can now use a fintech app and enjoy the same services. So that way we have democratized the whole ecosystem and brought fintechs into the entire financial ecosystem, so that they can provide a much more convenient and user-friendly, better user experience to end users.
Got it. Before we move to the other sections, I also would like to touch upon the international transfers which you mentioned. Is there a different system? For example, we get quite a lot of remittances, and on import and exports, there are a lot of transactions that takes place. And you mentioned about the international system, which requires about, I think, $25, and now you have basically taken it to the domestic side on clearance. Could you elaborate a bit more on how does it work, and also what is this international, the abbreviation that you used, and who owns that, and does it, for our audiences understanding?
So our actual network was primarily set up initially for domestic transactions. But however, due to financial crisis, Sri Lanka faced many challenges in receiving foreign exchange. So there actually central bank requested us to support to attract more remittances, as well as support tourism. Tourists to carry out transactions. Right. So in that sense, what we did two things. One is we actually went and established an app called Lanka Remit, where somebody outside Sri Lanka can actually tokenize their card and use the app and send money here. So that actually comes through the formal financial banking ecosystem. Right. So it's actually using the card rails, and basically funds come to a bank account here. And that's fully KYC accounts, and the money laundering aspects are handled by the banks, because both banks are involved, right? So in terms of the remittance, that's what we have enabled. But in order to facilitate tourism, so what we realized was, we had a lot of informal systems previously, right? Where the money was actually not really coming into Sri Lanka, Undial and all these other illegal systems, and people were sending money because they didn't have any other choice, right? So in that sense, what we figured was, can we provide a system for tourists to make a payment here, once they are here, by using their own app? Whatever that they are using in their own country, if they are using it in their country, the same way can they use it here. Because then you create a seamless experience, no friction, right? And they will use just the way they are using. And their account is actually also debited in their own currency. Right? So that's where we establish, we have already established a QR network, which is LankaQR. So what we did was we enabled LankaQR to be used by any app in outside by partnering with some of the networks in those countries. For
Right.
example, with India, we partnered with NPCI. So they have a system called UPI, which is basically, using their bank accounts to send money. And any UPI enabled app, once they come to Sri Lanka, they can actually scan Lanka QR and make a payment. And using the app, like, they have PhonePe, GPay, Google Pay, and other apps that are used in. So all the same app, right? And they just scan and pay. Their account is debited in INR, and the merchant gets real-time credit in LKR here. So we have established that system. So initially, the NPCI, UPI, then we connected UnionPay, China. We have also connected Alipay Plus, which actually connects 36 wallets in the region. So any of those 36 wallets, if they come to Sri Lanka, now they can scan and pay, just like what they are doing in other countries. We are also just almost there connecting WeChat, which is the largest wallet in China. And we are also working with many other countries to enable these services. So the whole purpose is to support the foreign exchange incoming into the country. So that was phase one. We are also working to the other way around. When one of our people go outside to facilitate that payment, we have not enabled that yet, but the main purpose was to support the country and the government and the economy to attract foreign exchange. So that's where these international collaborations we have established to facilitate. We are also actually facilitating card transactions when foreigners come. JCB card from Japan, a UnionPay card, all these cards we have connected through our network, so they can go to any POS or ATM in Sri Lanka and either withdraw cash or make a payment. So that we have enabled rails, because some of the other international cards are already connected. But for the networks that are not connected, we are actually helping them to connect and create a seamless experience for people who travel to Sri Lanka.
No, just to make sure that I understood what you said right. So basically, if a foreigner comes and let's say he or she uses their ATM in an ATM here, so if the two networks are connected, then basically they can withdraw cash in LKR, but their account will get debited in their own currency.
That's
if it's
correct.
Connected. And
That's
now,
correct.
as you said, like you have connected with Alipay and most of the other digital wallets as well as other networks. So then that transaction is quite smooth. And even for Sri Lankans who travels overseas, they probably use their local bank card in their ATM. So as long as it's connected, that transaction is smooth. Did I understand it right?
So what actually happened was previously some of these transactions were happening through international networks only.
Right.
So the cost structure was quite high.
Right.
So what we did was we directly partnered with some of these players, and once we connect, actually connects to the domestic network through us. And then what we have done is we have actually, brought the cost structure down for somebody to use, and some of these networks were not connected here. So now once we have enabled those, a person can come to Sri Lanka, use his ATM debit card in an ATM or a POS here, and carry out a transaction. So either withdraw cash or make a payment. So that's been enabled through our network.
Not only that, like even like a QR, like a digital payment through a QR code, that you can do the same.
Absolutely.
Got it. Now coming back to the cost structure and the transaction time. Now you mentioned, let's take the easiest example on a salary, the bulk transfers, that when you give the direction in the morning, the salaries get transferred in the afternoon. Like, how do you benchmark it with the other systems around, like in the region or in the globe? Or is there a way that we can further minimize the transaction time? So from 8 days of check clearance, now we have brought it to 1 day. Now, is there a way that we can faster it more? Or like, how do you see on the improvement side?
Yeah, so I think these are addressing different problems in the market.
Right.
So, for example, when you send, want to disburse salary, it may not necessarily need to be real time. Right. So those are used for specific purposes. Right. So in that sense, bulk payments doesn't necessarily have to be real time.
Right.
But a customer payment, fund transfer
has to be
be real time, because the other party needs the money then and there. Right. So normally real time payments are used when the receiver needs the money instantaneously. Whereas bulk payments are used when there's no urgency to have it real time. And something like checks, it's actually I don't know whether it's, I think it's not properly legal, but the checks are actually used as credit instrument by traders, right? So because a check gets rotated 30 days, 60 days, 90 days among parties. So because of that, still the checks are in use, right? So in that sense, the check doesn't need to get real time, realize. So T+1 we call it. The next day clearance is good enough actually for that kind of transaction, right? So I think all these systems are, especially if you are doing a mobile payment, it has to be real time, because you send instantaneously, you expect the other party to receive instantaneously. So in that sense, I think it addresses different problems in the market.
Got it.
And provides different experiences for users.
So do you mean to say if it's real time, there's a cost? Because I think the next question that I was coming to, that was in the lineup was, okay, people always say, okay, when I transfer on the own bank, they don't charge, or they charge 5 rupees. But when I transfer to another bank, they charge 25 rupees, 30 rupees. Yeah. So does it mean that the cost of the transaction with the real time is, maybe you are using a higher bandwidth or whatever that technological thing? Is it the reason?
Yeah, actually, when you have different systems, it has different requirements. So there are different technology investments that has to happen, not just from our end, but also bank side as well. So based on that cost structure to establish as well as maintain a system, a pricing formula is determined, right? However, the pricing formula is controlled by central bank by setting up a maximum customer fee. So it's not controlled by the banks or others. It's set by central bank to have it affordable. Not necessarily free, because the problem with free is when you give something free, who pays for the maintenance and upgrade of that system? Because it's a problem with the subsidy, concept of subsidy, right? So as long as you charge a reasonable fee, then the customer would use it, because what is the cost of the alternative? Now, for example, if I want to send money to somebody, if I want to say withdraw money from some, so if my ATM is not next to me, next to my house, I have to go 2 kilometers. I have to take a bus. So what is the cost of the bus? One bus salt is 28 rupees. So up and down, it costs me 56 rupees. So as long as you can do it from home or the next door, right, for cheaper than 56 rupees, the cost of the alternative is better, right? So in that sense, the fees that are charged should be reasonable and affordable, plus also it should be cheaper than the cost of the alternative. So I think in that sense, because otherwise what actually happens is, otherwise these systems will not be upgraded. Security will not be maintained. Because there is an investment that in all parties, it's not just one party, because it's a complex network, right? The telcos have to upgrade their networks, bandwidths have to be upgraded. So in that sense, cost structure is determined so that a quality, world-class service can be provided. And the customers, what they need to look at is, what is that cost of the alternative, right? And the time that is wasted, those are not normally costed by people. So even if you leave that aside, there are direct costs as well. So I think, so depending on the investments and other things that have to be done by the entire ecosystem, a fee structure is determined, but ideally minimal, right? But that is generally not a deal breaker, because what we are seeing is, there are a lot more and more people seeing the convenience, they are actually using the service. Right.
So did you mean to say that there's a pricing formula already with the central bank on determining these transaction fees?
So generally the customer fee, if a customer gets charged, that is approved by the central bank.
Right.
And central bank actually approves a maximum fee.
Right.
Right. So a bank may offer it lower, but cannot go above that. So it's only a maximum fee that is determined by central bank, so that it becomes financially viable to run the system and operate the system. So that's the whole idea of a fee. And that fee, as long as it's not a deal breaker for somebody to use, I think it's people are happy to use.
Got it. And then when you're using the system, so does it, why it's between the same banks, it's a lower rate, or it's sometimes free of charge, or does it Does it is that explains the system compatibility and that investment, or what it differs a higher cost?
Well,
If it's
yeah.
pretty much, if the LankaQR, the LankaPay is connected with everybody, why it's a higher cost between a different bank?
Yeah. So one thing is, when you deal with one bank, the funds are within that same bank.
Right.
Right. So there is no fund movement. Right. So plus the if you look at the network, it's only connecting within that same bank.
Right.
But when you are connecting other banks, there are telecom networks connected, intermediaries connected, fund movements. There's a settlement process. So there's a bigger
More resources
complexity.
being utilized
Plus
on the
network,
network.
the technologies, other resources are being utilized. So in that sense, to establish and maintain that there's a cost structure than one bank, right? The other part is some of the banks, if it's their own customer within the bank, they absorb some of these costs, right?
Right.
And they don't pass that to as a customer service for
Right.
their own customers.
Right.
But then another bank providing that same service, for example, if you take the ATMs, right? The bank, it costs the bank to transfer the money, keep the money, holding costs, security, all that to maintain an ATM, right? So if you're providing a service to another bank customer, somebody has to recover that cost. How are they going to maintain that? So in that sense, it's reasonable to charge a fee because customer gets the convenience of convenience plus less time and lesser cost most likely because of the travel this thing. So then the customer will decide, would he travel 2 kilometers or 5 kilometers to your own bank ATM and waste your time and spend that money and take there, or you go to the nearest. So that will that's a consumer choice, consumer preference, right? You can actually do that. For example, if you take previously sending money, there was this postal order system, right? You can go to a money order, go to a bank and get a money order and send. But that used to cost 250 rupees. You have to wait in the queue. You go to the bank, physically go to the bank. But if you can provide that service for 25 rupees, wouldn't people shift, right? So the problem is people tend to compare this 25 rupees with zero, right? So in that sense, how do you actually compare that? Because electricity doesn't come to you free. Water doesn't come to you free. Data doesn't come to you free. Telecom charges doesn't come to you free. So why only a financial transaction people are asking free when everything else you are paying for it? And the providers have to pay for all these services. And, so how can you actually provide a service free when there's a cost structure? So I think what people need to understand is, as long as it provides convenience and they have a choice. Consumers have a choice. They can go and wait in a line and make a payment. Waste their time, right? Or do you want to pay a smaller fee, have the convenience, and use that system? So I think we are seeing more and more now. For example, if you take this interbank ATM transaction, we are seeing a rapid growth. So which means people are realizing the value and they are not minding a fee because obviously the cost of the alternative is more.
Got it. Then also want to move to on the this QR based payments. So we have been discussing, and even in your website, moving to a cashless society is one of the main objectives. So what people would see is like, okay, connecting with this Indian platform, these UPIs and all that. But what does it really have to happen? If we were to move forward, there's a GovPay, which I will come at the latter stage. But what is the role of LankaPay on this journey?
Yeah, so I think the QR is a kind of interesting story because what happened was, if you look at history of Sri Lanka, we have been 2 decades of cards, right? I think the demographics and the context of Sri Lanka is different, right? Because if you look at Sri Lanka, it's actually a well-banked country. If you take the population, 90% of people have bank accounts. Whereas if you compare India, before Aadhaar came, it was less than 20%, right? So people did not have bank accounts. But here, Sri Lanka, people have bank accounts. We have issued more than 19 million debit cards, which means pretty much everybody has a debit card. And so they can actually carry out a debit card transaction. However, this card transactions didn't take off because, as you said, the cost structure was high. So the cost structure of when you pay with a card, there's something called MDR, merchant discount rate, which is the commission charged by a bank from a merchant. Because the international cards are used and international networks are used. So if I go to a supermarket and use my local bank's card, the money has to get transferred from my bank to the bank of that supermarket.
Yeah.
Both are domestic. But when you are using international cards, the transaction gets routed internationally. So that's why the cost structure is high. So because of that, the banks used to charge 2 to 3% per transaction from the transaction value. Now, for a larger supermarket or larger retail shop, this 2 to 3% didn't break the deal. But for a small timer like a SME or small retail shop, corner shop or a king coconut seller, 2 to 3% of their profit was a big amount.
Yeah, I think this is the case. Like sometimes when you go to buy a computer or a phone, if you say, "Can I pay by the card?" they say, "Okay, you can pay, but there'll be a 3% or 2% addition. Otherwise, you have to go to the ATM and give it cash." Is basically the context that you are explaining.
Absolutely.
Okay, right.
So in that sense,
but it doesn't happen at a supermarket. I mean, when you whatever the bill that you swipe the card or tap the card, is exactly the same.
So
amount.
there, what actually happens is larger retailers have a better bargaining power.
Right.
So they negotiate with the banks and get a lower rate for this commission.
Right.
So sometimes it can come down to about 1.2%, 1.5% because they have large volume transaction.
Right.
But for small time retailer, they don't have that bargaining power. So the only option for them is if they want to accept a card, they get charged 2 to 3%. Right. So in that sense, there's a economies of scale.
Right.
Right. So there, what we realized was rather than saying free, is there a point where we can bring it down to where people don't feel a difference?
Right.
So what we looked at was if the range is somewhere between 0.5% to 1%, it's not a deal breaker. Because you need to have some monies in the system for people to maintain the network. So that's where we actually put our brains together and thought, okay, so if we can reduce this to 1%, right? I mean, if it can come further down, that's fine. But 1%, people pretty much may not feel it, right? So that's why we brought down QR to 1%. Card, we actually established alternative card to the existing cards in the market. LankaPay, we co-branded with JCB International. So there's a debit and credit cards available. So if you get that card, pretty much the merchants only get charged 1%. As opposed to 2-3% for other cards. QR, actually 1%. Now, what actually happened was during COVID as an experiment, central bank actually brought it down to 0.5% for a limited period, especially to help during the COVID period. However, the problem was even when we brought down to 0.5%, nothing really happened to the transactions. People didn't come and jump and use that. Right? So by reducing 1% to 0.5%, nothing really happened to transactions. So what we realized was 1% is not a deal breaker. It's just that how do you increase consumer adoption has nothing to do with because the real issue is your case is there, merchant trying to charge that back from customer, but the fees are actually charged from the merchant. So customer, whether they use cash or other things, there's no additional fee. Right. So it's not an issue for consumer adoption unless the merchant tries to pass that percentage back to the customer. So what we have really seen is that 1% or 0.5% merchant doesn't pass back. Right. But if it's obviously 2 to 3%, then and if it's a large enough value item, they will try to pass it back because they don't have probably that much profit margins to maneuver. Right. So in that sense, as long as you bring it down to a reasonable, what we call MDR, merchant discount rate commission, I think the ecosystem will function and there will be other reasons for people to start using. So one of the main reasons, so QR network was established mainly because even though we had cards, in entire Sri Lanka, we have only 130,000 POS terminals. And out of that 130,000 POS terminals, majority are in supermarkets and large retail shops. Right? So if you take the unique number of merchants covered with POS terminals, probably less than 50,000 or maximum 50 to 60,000 out of millions of merchants out there.
So you mean that POS machines, we only have 130,000?
130,000
entire machines?
Entire country. So again, not unique, right? because each supermarket has about 10 or
No,
50.
exactly, that's right. So if you have like 10 at one supermarket, so that means
that out of that 130,000, right?
Right,
So if you
okay.
take the unique merchants, as I said, 50 to 60,000 covered.
Right.
The entire country. So what about the rest of the hundreds of thousands of merchants? Even if the customer has a card, they can't use. So they need to have a system. So one of two problems. One was this commission. In the 2 to 3% the merchants were not willing to accept. The second one, cost of a device. Because the cost of the device, merchant has to bear. Especially the SMEs, they can't, it used to be about 50,000. Now with the foreign exchange going up, it's now cost more than 100,000. So small time retailer is not willing to pay for that. So they didn't have a POS terminal. Customer has a card, you can't use. So we did a system where zero cost to the merchant, zero upfront cost to the merchant, can somebody pay? So then what we saw was, in Sri Lanka, when we did market research, we saw nearly 70% of the household has mobile phones, thanks to COVID. So customer already has a smartphone. How do we enable a digital payment to merchant? So that's where we introduced QR, which is just a sticker. So that sticker contains merchants' banking credentials. So if you have a smartphone and an app, you just scan the QR. It provides where to send the money, right? And you have to say 1,000 rupees, type 1,000 rupees. The app knows where to send the money, so the money gets transferred from bank to bank. So it basically provided a system for merchants at zero cost, but for customers to make a payment using their smartphone. So that actually bridged that gap of SMEs or MSMEs having to have a device and pay for a device, and also incur a 2 to 3% commission, because LankaQR commission structure was brought down to 1%, and they have no other cost structure to incur, and facilitated digital transaction without cash.
Okay, now the people may not know how to pay on this QR. I mean, people know, probably most of them know how to use a fintech app like LankaPay.
Yeah.
They know because they already the bank account is connected.
Yeah.
But I think probably many people have seen these QR codes, and there are QR codes for everything now, everywhere.
Yeah.
So how does it get connected to does it through the bank app, or could you explain to the benefit of our audience?
So what we actually did was, because in many countries what we have seen is for payment, there were multiple QR standards. Now even in India, there are Bharat QR and UPI QR and many. So in Sri Lanka, from day one, we said one standard for Sri Lanka, which is LankaQR. So if you want to make a payment in Sri Lanka, only you can use LankaQR. There's no other QRs available. So customers is LankaQR, you can make a payment. So LankaQR is for making a payment. There can be QRs to identify locations and other things, but LankaQR is to make a payment. So if you see LankaQR and your app says it supports LankaQR, basically what you do is the option is there, it just scans. Once it scans on the app itself, it shows who's the merchant, that detail. So it's just basically simply entering the amount and making a payment, right?
But when you do that, through your phone, your bank app has to be connected to that.
Yes. So if the bank has a QR payment option, it's already connected.
Right.
So always there will be LankaQR or QR payment option.
Right.
So once the QR payment option is there, which means it's actually connected to the network, right, to facilitate a payment.
Right.
So the difference here is, most of the banking mobile apps, you cannot do it on a internet banking on your browser, on your phone. It has to be a mobile app. Whether it's a internet banking, a mobile banking app, or a fintech app. So they will have the QR option where you can actually scan and make a payment. So there's another option. If the merchant has a device, then they provide the QR on that device, which also has the amount built in. So then the customer doesn't even need to type the amount. The amount also gets actually, when you scan, the amount also comes. So all the customer needs to say pay. But if it's a physical, on a cardboard pasted LankaQR, once you scan, you will have to enter the amount, because that dynamically it can't generate the amount. So that's the difference in a static and what we call static and dynamic QR.
Got it. So what if someone would argue like only having LankaQR, doesn't it creating like a monopoly? Because if you the fintech apps, like they provide a lot of diversity, probably they have different bargaining systems and different offers. So why not open for diversity? What blocks you to open up?
There is a difference. So LankaQR is to ensure interoperability. So for a customer, multiple choices. Right? So QR is only for merchants to accept the payment. Right? So in that sense, having one standard, because otherwise, how would the customer know whether to scan this QR or this QR or this QR? Right? As a consumer, we wouldn't know. So we wanted to remove that barrier of confusing the customer. So when a customer goes and sees Lanka QR, doesn't matter whether that QR belongs to your bank. So anybody can issue a QR as long as it follows the Lanka QR standard. So any bank, any financial institution, or even fintech, they can issue a QR, right? So it's completely interoperable. It's democratized. So only thing is it follows one standard so that not to confuse the customer. But from an app and others, you can use any app as long as only thing is it creates readability. So the main purpose why one standard, to ensure that complete interoperability. What actually happens in other countries, you can scan one QR, it works, another QR, it doesn't work because those are not interoperable. But here everything is interoperable, so the consumer has a choice. Right? Only thing is every bank issuing a QR follows one standard.
Okay, got it. And coming back to the rest of the other services on this cashless transaction world. So what now? Where are we as at now? Because there were, multiple suggestions. People are suggesting to ban, cancel 5,000 rupee note, and so many suggestions to move to a cashless society, and also for taxation purposes, so many suggestions. Now, since someone who operates this entire network, how do you see this is moving, and how the payment? I think the GovPay have mentioned, if I remember right, about 20 million transactions was done in 1 month, if I remember right, if the numbers were right. So how does it move forward, and what are the next steps, and which direction is it going?
So I think when we are looking at numbers, we have to be careful in the context where you are.
Mm-hmm.
Now, we are very quick to jump and compare with other countries. But when you are comparing with other countries, you have to compare the context as well, right? For example, if you are comparing with India, first you have to look at what is their population and what is our population. So 22 million versus 1.5 billion, right? What is their GDP? Their GDP is $1.7 trillion versus what is our GDP? Barely $100 billion, right? So what is the financial result of a financial transaction is based on economic activity, which is based on GDP. So when you are comparing transaction volumes and values, you always should compare with your GDP, because the transactions will happen as a result of economic activity, right? So when you compare in Sri Lankan terms, last year, 2024, all our systems facilitated 34 trillion rupees worth of transactions, which is more than GDP of Sri Lanka, right? Our real-time payment system facilitated 17 trillion rupees worth of transaction, which is more than 50% of GDP. So whether we are at the top, but I think we are at somewhere. Obviously there's room to grow. So it's not that people are not using it. It's actually using, may not be for certain purposes, right? And if you take government payments, actually before GovPay, which was launched this year, we already facilitated payments to 8 departments, which is Customs, Inland Revenue, Ports Authority, SLSI, BO, and others, right? Last year, we facilitated nearly 2 trillion worth of revenue collection using digital channels, right? So I think it's just that where we need to crack is the retail space. I think this is what is not propagated is SME base. So the SME base had multiple reasons. So we had deployed. So I couldn't tell you this thing. We had only 130,000 POS terminals, but we have deployed unique 400,000 merchants with QR. So now we have brought in that entire merchant base into QR who does not have POS machines, right? So which means they have the capability of accepting digital payments. However, we have not seen adoption of making payments using QR. So people like to attribute it to commission. Personally, I don't think so. I think it's multiple different reasons. One is obviously fear of taxes, right? So because most of these SMEs are not in the tax network net. So they fear once they come into digital, their transactions are recorded and probably they become liable for taxation, right? So I think that is where we had to be very careful as well as creative how we bring them on board. Just because a customer having a smartphone wanting to transact may not necessarily will be facilitated because there's no option provided by it, right? So I think some of the countries have been creative. For example, to address this taxation, I'm not saying should not be, obviously taxes should be charged. Maybe you give a lower tax rate if you do the transaction digitally as opposed to cash, right? So then it encourages people to move digitally than discouraging saying, hey, I will get caught to taxnet, right? So I think we need to be positive and progressive in how do you take this forward by looking at being creative than trying to find ways where it just stops people from doing. I think that is where we need to get a balance of how do you drive adoption, and and so sometimes we look at the wrong places for solutions, right?
Okay. And also want to understand I understand the payment platforms it runs on your LankaPay platform. Now people always have other concerns about this, e-signatures and even KYCs, because probably you have multiple banks accounts from different banks, but most of the CEOs and these retailers or entrepreneurs, what they do is like sign checks and signing documents day in and day out. So is there a solution under your platform to do that, or is the digital signatures, is something comes under your purview, or is it a separate problem that we have to discuss altogether?
No, actually, we also run the Digital Signature Certification Authority. That's the only one available in Sri Lanka. So actually, even though people are not aware, they're already using digital signatures.
Right.
For example, when you're sending salaries, that files that get transferred are digitally signed. So already digital signatures are there. All these checks, when they send interbank checks, those are digitally signed. So the infrastructure is being used. People
Right.
don't know that.
Okay.
Then when I talked about attaching your bank account to an app. So they are actually digital signature is real time issued to the device. Customer actually signs a mandate. Because what happens is when you have a bank account, you have a physical mandate with your bank. But when you go and use a third-party app with another bank, you don't have that mandate. So we have enabled a system where digital signature is used by customer. They sign a mandate, giving the authorization to debit their account to an electronic mandate. So that system. So we have seen more than 2 million devices have digital signatures and this capability already in the market. So people are actually using the system. So what we have also in terms of document signing. So that is the biggest area. I think we need more and more adoption. So one of the things that we did was when we worked with customs, especially during COVID time, people, so while we automated the payments, the document submission was a problem. So what we did was we enabled traders to digitally sign the documents and upload it from their office or wherever directly to Asikuda system. And from their side, they can validate the digital signatures and accept that as a valid electronic document. One of the problems with electronic documents is those can be tampered easily, right? So once you put a digital signature, it becomes tamper-proof. So if you tamper with the document, after putting the digital signature, the receiver would know that the document has been altered based on technology.
Right.
So in that sense, it ensures tamper-proof. Also, it creates a record, and also it creates, so it can minimize corruption and all the other things, because now technology will ensure that transactions are secure, transactions are recorded, plus documents are also tamper-proof. So once both these coming together, I think it creates that ecosystem where you can go for a complete digital solution with also minimizing some of these malpractices as well.
Got it. I think we are coming to the final stage of the conversation. The other main concern is using this digital payments, cards on the cybersecurity and the data security point of view. What is the solution, or what is the assurance that you could provide, since you run the main operating platform? What are the developments?
Yeah, so I think in terms of cybersecurity, we have, in terms of you take the total number of incidents, we the cybersecurity related incidents have been fairly low. What we have seen are, in terms of more scams and social engineering type of incidents, right? Where what actually happens is the fraudsters target people and extract their information and use that information to take money from accounts, right? Which is basically scams like what we call OTP scams and others, right? So we have seen people sharing their OTP, which is the password to use an app, with third parties. And what they do is they take the OTP and clean their account, right? So in that sense, I think it's more of a awareness issue than a security issue. But certainly there is cybersecurity there. So what we have done is we have actually a division called FinCERT, Financial Sector Computer Security Incident Response Team, which is one of our divisions actually that functions under central bank. What they do is they work proactively with banks and provide support to make sure that the systems are secure. The second one is if some incident happens, they actually quickly work with them to close the gaps if they are there. And also they have jointly established standards like baseline security standard for banks. So they need to have a minimum baseline security, which has certain governance structure. They have also established baseline security standard for mobile payments. So in that sense, even a third-party app, they have to adhere to this baseline security standard for mobile payments, and they have to get verified by a third-party audit company that the app certifies. Otherwise, they can't connect to the network. So there are basic security mechanisms established. Obviously, the fraudsters are smarter, than sometimes, some of us. But the fact of the matter is you can only minimize. So, and also in terms of our infrastructure, we are mandatory following international standards so that the data is encrypted, data is masked, right? Even most of our people don't have access. And access is also provide need to know basis. Some of us who doesn't need that data access, we don't have that. So it's based on roles and these things. But those are also under PCI, even people's police records are checked. So there's a stringent process, that international process that is followed to make sure on one side security, other one is the data protection, right? So because some of these banks and even some of us handle personal information, so those need to be safeguarded and make sure that minimum people will have access, need to know basis, as well as the data is secure. So all these precautions are there, but still, obviously, the world is moving. The security incidents has happened, but I think we have taken a lot of precautions to minimize some of these with the banks and central bank. And I think, it's a balance, fine balance. Only problem is you can put more and more controls, then people will not be able to use an app, right? If you ask for 3-4 passwords, right, to protect that, customers will not use. So they would want like simple thumbprint or a retina scan, type of security, which is seamless security, right? So that is where the world needs to move. You need to have enough security, but you need to have also seamless nature, because otherwise you will have every technology, but people will not use. So I think it's how do you strike that balance? So that is a challenge. That is a challenge with the changing threat landscape of cybersecurity and other areas. But how do you bridge that balance and also make sure adoption? Because if you don't have adoption, no point having security. So it's a fine balance.
Got it. And my final question, I think the other complaint always people have is no PayPal in Sri Lanka. Sometimes the other payment apps, like it may be the Apple Pay, there are certain apps doesn't really work here. Is it comes under your purview? Because since you mentioned that you LankaPay partnered with Alipay and other platforms, is it a delay from your end, or is it like those companies who really have to make a decision? Just explain what is the context here.
Yeah, so PayPal doesn't really come under our purview, but we got involved because obviously some other, especially freelancers and others, couldn't get the money using PayPal, because people outside prefer to send money using PayPal. So it's a very, very simple. There's no regulatory issue. It's actually PayPal is not interested. because when they assess the market, because they are a US company and they have to go through OFAC regulations and paperwork to set up a subsidiary or something in a country. Because when they enable payments in a country, they set up a subsidiary, right? Because they have no questions asked, refund policy and all that. So in that sense, to set up an operation, it costs them an arm and a leg, whereas they have not seen the business potential because our market is small compared to, but even say if you go to India, massive market. So actually even central bank has tried many times to entice them. They have not been interested. So in terms of PayPal not being here, that's the reason, not that any restrictions or anything. So we are actually looking at different alternatives. There is Stripe, there are other payment mechanisms. So if PayPal is not interested, then we need to look at. So it's a matter of, I think, the market. So also those companies look at the statistics in a country. Now, for example, most of them are interested if our credit card penetration is like 40%. Sri Lanka credit cards only 2 million credit cards, right? So it's a very low percentage. So some of these companies gauge the market opportunity by looking at the statistics of that country as well, demographics of that country, and if they feel if they below their threshold, they may not be interested. So we need to look at alternatives. So that's why even though PayPal is not there, then we need to, even if we tried for several years, we couldn't get them to come in. So let's find alternatives where people can start using. So that's where we have actually moved on that side. How do we facilitate these payments for people to accept payments using other channels and make sure that the transactions happen. So we may have some limitations, but I think still overall, if you look at an alternative and provide that same service, I think it'll probably serve the same purpose.
And the other payment platforms like Apple Pay, or is it a restriction, or is there a legal barrier, or like anything that stops?
There is no restriction. Just Apple Pay need to enable in Sri Lanka using the entire ecosystem, financial ecosystem.
Same as PayPal?
PayPal is something different. PayPal is more like a remittance kind of issue. Apple Pay is basically using your card, whatever card that is issued in Sri Lanka. Only thing is that those rails have not been enabled. Because obviously even Apple Pay, for them to directly offer here, they may not have seen potential. But I think hopefully it will come eventually.
Channa, anything else that you want to add which I did not ask? Any final comments?
Yes. So I think GovPay is something that is the latest. So there, what we realized was we can digitize the entire economy, but if you leave the government out, then that's a huge missing part. So the problem we saw was, I said we digitize about 8 to 10 departments who have systems. So what we saw was most of these government departments don't have a system. Right? So how do you facilitate digital payment to such departments? So that is where what we thought was, how do we bring them on board? Since they don't have a system, can we actually give the customers an option to make a payment? So that's where we thought, okay, customers have smartphones, customers have some app, whether it's internet banking, mobile banking, and customers have a physical invoice. For example, to pay my rates to my municipal council, I get a physical invoice, right? And it has some basic information which is used to facilitate a payment. So what we did was basically created a system using whatever app you have and use that information in the physical form. Some information is put in as a form. You enter that, you make a payment. The back end, the system knows the bank account of that particular department. So customer's account get debited in real time. Funds get transferred to the government department in real time. And customer gets a e-receipt, which is valid under the Electronic Transactions Act as a receipt. Right? And the department gets a portal because they don't have a system. They get a portal, they just log in, they can see the transactions that have come through. And later on, maybe the same day or following day, they can check with their bank and see whether the actual money has come. They click confirm, a SMS will get generated to customer from that department saying, hey, we received the funds. So it's a very simple system, but it serves the purpose. Without actually, because if we waited till every department has a system to connect all that, it will take 10 years or more. So what we have implemented is a very simple system where a customer can make a payment to any department using whatever app they have. So we have now extended it to traffic fines. So what we saw there was a problem, because customers, the problem for them is with, I'm not saying, creating an offense is a good thing, but once you get caught, what is the option they had? They had that physical, traffic fine sheet.
Yeah.
They had to take it to a post office and make the payment, collect the receipt, go to the police station and collect your license.
Yeah.
Right? So that hassle, for example, Sunday, if you get caught, post office is closed.
Correct.
So if you get caught, 200 kilometers from home, you have to go on another day and when the post office is open, right? So in that sense, what we felt was there's a problem on the spot. This is only for spot fines, right?
Yeah.
What we felt was, what was the problem? How do you make a payment? So what we did was we used the same GovPay interface. You have that same traffic fine sheet. Even when you go to the post office, the information in that sheet is used. So we used that same information, created that form. Customer makes a payment, automatically goes and lands the money in a state bank account of police, right? And instantaneously, a SMS goes to the policeman's mobile phone. Saying money from this licensed vehicle number received. And once that comes, the license is given. So it addressed the problem, solved the problem. So what actually happens was, the alternative was, people, because of the hassle, they used to do all sorts of malpractices, give money and get away without giving the license. But now they don't need to do it. Actually, the problem was not the amount of fine. It's the hassle.
Absolutely.
So we have solved that, we have closed that hassle by providing a digital option for you, whatever. So we could have easily introduced an app. But then we had to make sure people download the app, install that, add the account, all that. But they already have something. Why not provide the service? So what we are saying is, if you are providing a digital service, provide it to whatever they have, rather than asking them to install apps and all that. Right? So that's where I think we have solved the problem by looking at the entire ecosystem and providing a solution to a customer for what already they are using. So then people will start adopting. So in that sense, we are seeing traction happening. So in terms of the numbers, in month of May, actually we did almost 20 million rupees worth of government payment transaction through GovPay, right? And it was a 6-fold growth from launch in February. Which was 3 million to 20 million. So I think it's a rapid growth. So we are bringing in all the universities, municipal council, Pradeshia Sabhas, and all that. Supreme Court we recently added. So all the court system, I don't know whether you know, all these lawyers and others were paying cash in courts, right? Yeah. So now, especially with Supreme Court coming and Appeal Court and others to follow, now they can actually make payments digitally to even courts. So I think once we do that, people will have more reasons to use digital. Rather than just paying your electricity, water and other bills, they will have multiple options to make payments. So I think the adoption will increase.
Thank you very much, Channa, for joining us and providing these detailed explanations on multiple things, how it works and the future, and what are the plans by the government's end and from the LankaPay's end on moving to a cashless society. So then you need not to come up with these all sorts of suggestions on banning 5,000 rupee notes and things like that, where the system overall evolves with convenience factor from the government, and the consumers mainly drive for that. Thank you very much, Channa, for joining us at Advocata Studio, and please make sure that you share this conversation with many people as you can, and also subscribe Advocata Institute. We are also available on Sinhala as Advocata Plus, and also in Tamil as Advocata Kural. And as you know, you can find us on TikTok, LinkedIn, Facebook, pretty much across, even on TikTok, and across all social media platforms with solid content. And make sure that you can also join us, support us by being a subscriber. So go to our website, go to the support tab, and you can become a member and a subscriber. So then you will get more and more exclusive content that we produce. Thank you very much, and thank you very much for joining us, and we'll see you with another conversation at Advocata Studio.